Think Bitcoin is a guaranteed path to riches? Think again. While the potential is huge, ignoring the red flags could cost you everything. Let's uncover the critical warning signs you absolutely need to understand before diving in. Bitcoin has exploded onto the global financial stage. It's moved from a niche concept to a major asset class, attracting millions of investors worldwide. Many have seen incredible gains, fueling the excitement around cryptocurrency. However, this rapid growth doesn't come without significant risks. The crypto market is famously unpredictable and complex. Understanding the potential downsides is just as crucial as recognizing the upside potential. Join me as I dive into the top warning signs about Bitcoin that could save you a fortune. Let's see if I can spot them all. This isn't just about price charts. It's about fundamental market dynamics. We need to analyze the landscape critically. Ignoring these factors is a common mistake for new investors. One of the biggest clouds hanging over Bitcoin is regulation. Governments globally are still deciding how to classify and control digital assets. This creates a volatile environment. Sudden policy changes can drastically impact market sentiment and price. A new law or ban in a major economy can send shockwaves through the entire crypto ecosystem. This is a key risk factor to assess. For instance, past regulatory actions in countries like China have caused significant market downturns. Staying informed about global regulatory developments is vital for risk management. It's a constant, evolving challenge. Bitcoin's price swings are legendary. Massive gains can happen overnight, but so can steep crashes. This extreme volatility is a major risk, especially for those new to the market. External factors, news events, or even social media trends can trigger rapid price movements. This makes timing the market incredibly difficult and increases the potential for substantial losses. It requires a high risk tolerance. Analyzing market sentiment and technical indicators can help, but nothing eliminates this inherent volatility. It's a fundamental characteristic of the crypto market that demands careful consideration and position sizing. The digital nature of Bitcoin brings unique security challenges. Exchanges and individual wallets are constant targets for hackers and scammers. Losing access to your private keys means losing your Bitcoin forever. Major exchange hacks have resulted in millions of dollars stolen. Phishing attempts and malware targeting crypto users are also rampant. Protecting your investment requires vigilance and strong security practices. Understanding how to secure your private keys and choosing reputable platforms are non-negotiable steps. This is a critical part of investor education in the crypto space. Don't underestimate the threat. The energy consumption of Bitcoin mining is increasingly under scrutiny. The proof-of-work consensus mechanism requires significant electricity. This raises questions about sustainability and environmental impact. This concern could potentially lead to negative public perception or even regulatory pressure. Some investors are starting to factor environmental impact into their investment decisions. It's a developing risk area. While efforts are being made towards more sustainable mining, it remains a point of contention. Analyzing the long-term implications of this debate is part of a thorough market analysis. Recent market events like the collapse of major platforms underscore these risks. They highlight the absolute necessity of doing your own research, DYOR. Blindly following hype is a recipe for disaster. Analyzing the fundamentals, understanding the technology, and assessing the risks are crucial steps. Don't invest more than you can afford to lose. This market demands a cautious and analytical approach. Investor education is your best defense against these pitfalls. Stay updated on market news, technological developments, and regulatory changes. Knowledge empowers you in this complex space. We've covered the major warning signs: regulatory uncertainty, volatility, security threats, and environmental concerns. Recognizing these is the first step in smart crypto investing. It's about risk assessment, not just potential gains. Now take action. Don't just listen. Learn. Research each of these risks further. Share your thoughts on these warnings in the comments below. Let's discuss. And for a deeper dive into future trends, check out my latest video linked right here.